some of you guys that were in the last class, you'll be lucky to catch that BTC safe, because that BTC, exactly what I thought in the first class, if doing like that trend line liquidity is happened on BTC, like for directional buyers for that BTC. If you guys caught some people that were in the first class from one type of liquidity, they would have followed and cleared that trend line liquidity on BTC. But yeah, let's just start. So can you guys see my screen? Can you guys see my screen? So the last class that we're going to repeat the same topic again. The questions for this class will be in the next class, because this is a complex topic that you just need to back test and learn before you now bring your questions to the next class for this topic. Now, this is on the different types of liquidity that we have in the markets and how to take your profit using those types of liquidity. Now, getting our entries, getting our market structure sheet, our break of structure, our inducements, we've already gotten that one down. But once you've gotten your entries and you've gotten your stop loss in check and your liquidity, the thing that most people fail to get is where to exit their trades. Now, if you get on a trade and you don't know where to exit your trade, you end up being in good profits and markets will end up reversing on you and hitting your stop loss simply because you do not know where to target your nearest draw on liquidity. And since we trade draw on liquidity-based system is market structure, liquidity points of interest, we are not going to excuse the liquidity part of this strategy simply because we use liquidity to get in, that is your inducement, and we also use liquidity to get out. Now, there are 4 types of liquidity that I use, and I use this in taking my profits if I'm trading. Now, one of the most common type of liquidity that we use on the charts, and the one that shows up, I would say 70 to 80% of the time on the chart, is trend line liquidity. Now, trend line liquidity is the liquidity that has been accumulated when market is on a particular trend. Now, you know that there are 2 types of trends, the uptrend and then the downtrend. So let's assume you have price on an uptrend, making a series of higher highs and higher lows. 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 The moment that price is on any particular kind of trend, with be it an uptrend or a downtrend, there's liquidity being accumulated on the opposite side of the chart. For example, if market is on an uptrend, there's liquidity being accumulated on the downside of the chart here. And the price is on a downtrend, making a series of lower highs and lower lows, 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 lower highs and lower lows. Market is what? Market is going to be accumulating liquidity on the upside of this chart here. What this means is that, because liquidity is money, liquidity in the market is money. Basically, you know that the chart is like the graphical representation of what the market is telling us. If there's buyers and sellers on the chart, the trade, your trading view is just basically how you know the graphical representation of it, whether buying or selling. This candlesticks movement here is basically our own representation of what's going on in the market. Now, liquidity is money in the market, is money. Wherever liquidity is, market will tend to go there because that is where there is money in the market. So trend line liquidity is one of the most common types of liquidity that we have in the market. When market is on any particular type of trend, there's liquidity being accumulated on the opposite sides of the chart. So if you have an uptrend, there's trend line liquidity on the downside of this chart here. And if you have a downtrend, there's trend line liquidity on the upside of the chart here. Are you guys following me up? Are you guys following me up? So trendline liquidity is one of the most common types of liquidity in the market, because when price wants to move from, let's say, point A here to point B, either market is moving up and trending to the upside and giving you higher highs and higher lows, higher highs and higher lows, higher highs and higher lows, higher highs and higher lows. So to get to this zone, you will see an uptrend, meaning that there's what? Trend line liquidity on the downside of the chart here. Or price is moving from this point to this point and it's giving you what? Lower highs and lower lows, 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 lower highs and lower lows to approach what? This level here. That means there's going to be what? Trendline liquidity accumulated on the upside of this chart here. Now, this is what? Money. And up here is also money. It means that eventually, when market should change structure, is going to go and target that nearest draw on liquidity for the trend line. So, for example, nearest draw on liquidity for this uptrend now is where the trend started from. So, for this is an uptrend, and this is what trend line liquidity. The nearest draw on liquidity for this trade is what where this trend started from here. It means that if this uptrend should eventually change structure to a downtrend, where market is going to go to first is to go and clear this trend line liquidity. That means it's going to sell until it takes out this low for where the trend began from. And if you have a previous downtrend, our market is going to making lower highs and lower lows, is accumulating liquidity on the upside of the chart here. If eventually market hits a zone for reversal, let's just assume like we have an order block down here where market is supposed to buy from. And before market gets to this zone, the pattern it used to approach that zone is this downtrend. This is what trend line liquidity. Eventually, when market hits this zone for reversal, let's say it's your order block or your breaker block, the moment market starts reversing, let's say it's buying to the upside, what market is going to do is to what? To buy until it clears this trend line liquidity here, which is to go to where the trend started from, which is exactly here. So market is going to keep buying until it takes out what? This entire trend line liquidity. So an example of trend line liquidity is what? This non-BTC now. You can see price initially on an uptrend, consistently giving you higher highs and higher lows, higher highs and higher lows, higher highs and higher lows. The moment that price changed structure to the downside, notice that market already broke the trend and started selling down. We knew that price already changed structure, so it's bearish. But for us to take our profit in the market, we have to ensure that BTC takes out the nearest draw on liquidity. And the nearest draw on liquidity is what? This trend line liquidity here, where market what started buying from and giving us an uptrend. This is what the uptrend line, meaning that this is what trend line liquidity on the downside of the chart, meaning that where the trend began from is right here. So eventually, once the structure changes and market starts selling, you're going to keep selling the market until that trend line liquidity here gets taken out. So for example, when I got this trade from this breaker block, my take profit for this trade was initiated until price successfully takes out this trend line liquidity. And if you notice, mistakes that people make is trying to reverse the market to the upside when market already changed structure, but have not yet completely swept liquidity. Do not try to use any POI that is inside of a liquidity zone to reverse the market when market has not yet completely swept that liquidity. What I mean by that is all these zones you see here, down here is an order block. Down here is also what? An order block. Down here is an order block also. Here is a breakout. You have multiple POIs at these levels. Now, let's say, for example, you had a bearish order block here, expecting to take a sell from. Now, market was giving you higher highs and higher lows, higher highs and higher lows, higher highs and higher lows, higher. Then it triggers your sell point of interest. Once you trigger the sell point of interest and your analysis is correct, market is now officially bearish. Now we have to now look for the take profit levels by looking to see if you can find the nearest draw on liquidity that is existing on your chart. Now, if you pay attention, you can see that the pattern that price was making before this bearish zone got triggered is what? An uptrend. Now, this uptrend is filled with liquidity on the downside of the chart, meaning that is what? Trend line liquidity being accumulated on the downside of this chart. Meaning that eventually, the moment that price triggers your bearish POI and it starts selling, your take profit level will be aimed at clearing that trend line liquidity that price was making while it was on the uptrend, meaning where the trend started from. So it will be right here that your take profit level would be. Now, the POIs that you have here, provided that all these POIs are enclosed inside of this liquidity zone, do not look for market to reverse and start buying when it has not yet taken out this trend line liquidity yet. If you look for a buy from this other block, you will be liquidated. You look for another buy from this second order block, your name is sorry. You look for another buy from, let's say, a breaker block here, you will keep getting destroyed until markets completely takes out this trend line liquidity. That's where markets may start reversing to the upside. Price will always target the nearest draw on liquidity. And majority of the time, it is always trend line liquidity. The moment that price approaches your point of interest, majority of the time, it does so in a trend line manner. And if market approaches your POI in a trend line manner, it is very obvious where that POI, where your take profit level is going to be. Let's assume for it, there's also another way to use trend line liquidity. Are you guys following me up, please? This one is not lagging. It's a lie. It's not lagging because I'm sure this network is not lagging at all. If it's lagging, is your network. If it's lagging, is your network. If it's lagging, it's your network. Okay, so trend line liquidity is one of the most common types of liquidity that exists on the chart. If you pay attention, you can see markets clearly on a downtrend and is giving us what? Lower highs and lower lows. Lower highs and lower lows. Lower high. This is a clear example of what? A downtrend, and also a clear example of what? Trend line liquidity. What this means is that eventually, if this market maintains this trend and eventually triggers a zone where BTC is going to start buying from, the moment that BTC starts buying, the take profit level for this trade will be to first of all go and clear this immediate trend line liquidity here. The pattern price uses to approach your point of interest is very crucial to knowing where your take profit level for that point of interest is going to be. Let's assume now that we had a previous uptrend. Price was giving us higher highs. These are two ways you can use trend line liquidity to take your profits. Market is giving us higher highs and then higher lows. 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 Higher highs and then for an extensive period of time, all of a sudden it gave us what? A market structure shift. Gave us our inducement pushed back down. Our POI is going to be what? At the other block level here, based on the rules in picking a point of interest. The moment price sweeps the inducement and triggers our point of interest, our take profit level will now be to look at the nearest draw on liquidity and understand if there was a previous liquidity type that market was on before our structure shift to the downside occurred. And if you pay attention here, you can clearly see what? An uptrend that gave us what? Trend line liquidity down here. So what it means is that if you happen to take a sell from the other block, your take profit level will be all the way down to where the trend line liquidity is. That is where the trend started from. This is where your TP will be. Now, you see all these other POIs that you are going to see inside here. No matter if you see a double break of structure, inducement, and other block here, don't take that trade for a buy. You see a breaker block here, don't take this trade for a buy. You see another block here, don't take this trade for a buy. Why? Because they are all enclosed inside of this trend line liquidity. The only POI you pay attention to use for any buy is the one that exists outside of this trend line liquidity. Let's say there's another block down here. That is the one you can actually be paying attention to for a reversal, not the one that exists inside of this trend line liquidity right here. So one example of that again is on Google. In fact, majority of, I would say 80% of the time that price approaches a point of interest, it does so in a trend line manner. We had a breaker block here. That price sold from, yeah, this other that the price sold from, I think it was, this time frame is more clearer for 5 minutes. That price sold from here. Now, if you pay attention, we already knew that we're waiting for a sell at this level. Now, if you took this trade, where you keep your take profit level may be hard for you because you don't really understand where your take profit levels will be. But right before price actually triggered this our breaker block for the sell, what the price started doing, it started trending to the upside. It was giving us higher highs and higher lows, 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 higher highs and higher lows. So this is what trend line. If you draw out your trend line, you can actually connect it. Now, what this means is that there's what trend line liquidity being accumulated on the downside of this our chart here. This is what trend line liquidity. So what this means is that eventually, when markets should start reversing, our nearest draw on liquidity will be to take out this trend line liquidity where the trend was started from. So if you took a sell from this level, this breaker block here, your nearest draw on liquidity for this trade will be where the trend started from, down here. This is a 1:10 risk to reward ratios trade, just from understanding the concept of liquidity. Now, any POI that you now see that is enclosed inside of this liquidity pool, like for example, this tiny zone, you now try to buy from here, your name is sorry. Any POI that is enclosed inside of this liquidity, inside of this trend line liquidity, do not look for reversals there until market completely takes out that trend line liquidity. So this is one way you can take your profit using trend line liquidity. When market already gave you your POI, now in the process of price approaching that point of interest, it does so in a trend line manner. You can take your profit by clearing that trend line liquidity that price was making while your POI was approaching, or when that structure shift happened. If you pay attention, you can also see another word, trend line liquidity here. When price started selling, what did it do? It sold until it cleared where the trend line liquidity was started from, which is this trend line here. If I can draw this one out. Another one, another trend line liquidity, and price sold from this breaker here. Pay attention. And the majority of the time, if price approaches your point of interest in a trend-like manner, it is more convincing that that POI is actually going to hold. If I have, for example, now let's say I have let me just say something. Let's say market gives me like let's say structure shift to the downside, gives me my inducement, and then goes down. And this is my breaker block that I'm expecting market to sell from. Now, before price approaches this zone, it started doing something like this: higher highs, higher lows, 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 higher highs, higher lows. And it goes and triggers this my breaker block. I'll be more convinced taking a sell from this breaker, knowing that there's liquidity on the downside of this chart for price to go and clear. When price makes this kind of movement, it uses a trend line liquidity. Just know that the reversal for that market is going to come very soon, and it's going to clear the entire trend line liquidity. So the moment that price approaches your point of interest in a trend-like manner, that trend line liquidity will end up getting swept later. So if I take my trade from this breaker block, my take profit for this trade will be aimed at targeting where the trend began from for this trade, which is down here. So it's just something like the same thing that happened here. Where the trend started from, down here. That is the nearest draw on liquidity. Even here, before price hit, there was a zone here on around this level. Yeah, here. Yeah, this level, this breaker block here. But this is a double breaker structure. Took this low out and then this low. Then this week is our inducement and price trigger this breaker block here. Our market triggered this zone for the reversal. If you pay attention, the price that market used to approach this level is what? An uptrend. And what is an uptrend? And when market is on an uptrend, what is being accumulated? Trend line liquidity. And what is it being accumulated on the downside of the chart right here? What it means is that the nearest draw on liquidity for this trade is this trend line liquidity, and the take profit level for this trade would be where the trend started from right here. That was why when people took a sell from this trade up here, that breaker block, the take profit level for the trade will be aimed at clearing the trend line liquidity that price was on while it was approaching that POI. So it's going to target where that trend actually began from. And any point of interest that you have enclosed inside of this trend line liquidity, price will keep eliminating and destroying your account. Then you now come and start crying in my DM. Hey, Iyke, I just blew my account to fund me. And I will laugh at you because you don't want to wait for classes to finish. So any POI that you have, your other block, breaker block, other block, they will all keep getting, even if market reacts from there, will be for a short period of time. Markets will keep failing all these POI because they are all enclosed inside of this what trend line liquidity. So markets will first of all target the nearest drawn liquidity and then take it out. Provided that you are right to your analysis, the take profit level will be the nearest drawn liquidity. And majority of the time, price approaches points of interest using trendline liquidity, as long as you're trading in the right direction and your analysis is correct. Sorry, are you guys following me up, please? Someone is asking to record locally. I'm not, I'm recording these classes, right? You guys stop asking to record locally. I'm recording the classes. So when I'm done, I'm going to send the recording to you guys. So one of the most common types of liquidity that we have on the chart is trendline liquidity. Trust me, majority of the time that price approaches your point of interest, trust me, check to see that the pattern that price used to approach that POI. It's always mostly trendline liquidity. Always mostly trendline liquidity. And when market starts reversing, that trendline liquidity, market will eventually always go and take it out as long as they are right to the direction of the market. So, understand? So if you check here, this is trendline liquidity. Market was approaching what? This zone down here for a buy. That's this breaker block here. So market took out this high. So when price took this high out, because market already started buying to the upside. So market now is within the uptrend, took this high and this high. That's a double breakout structure. This is an inducement. The nearest POI, this breaker block right here. So, but if you pay attention, the pattern that price used to approach this POI is what? A trend line manner. Lower highs, lower lows, lower. So this is what? Trend line liquidity. Now, what this means is that it is more likely that this POI is going to hold. And the moment price starts buying from here, it's going to buy until it's what clears that trend line liquidity that price was accumulating before our point of interest got triggered. So see, trend line liquidity, price swept it. Trend line liquidity. Now price bought from this breaker block that we had here. Double breaker structure, inducement, and breaker block. Before price approached the breaker block, it was what? On a downtrend, giving us lower highs and lower lows. When this was happening, I was more convinced to take a buy from this level, knowing that there's trendline liquidity on the upside of this chart and market needs to go and clear. So what will happen when you take your trade from the breaker block? My TP will be aimed at what? Clearing that trendline liquidity that price was accumulating while it was coming down to this our point of interest. Now, you see any point of interest that you see here for a sell, provided it is inside of this liquidity zone, inside of this trendline liquidity, do not use it to sell the market. You will sell from the OB here. You are gone. Your account, you understand? You know that they said you take your money for vanishing. That's what will happen to your bank, to your this. And most people will now say, yes, I have my order block here. I have my inducement. Tony taught me. So it's time to go full margin. Not be me send you. I will deny you because you're not trading like my students. They'll wipe you here. You'll be like, oh my God, they just took me out now and they still started selling. Oh, manipulation, market manipulation. Let me just jump in here. No problem. I will sell until this low in this market. You will sell now. Because price is not yet done clearing trend line liquidity, they will sell a bit down and then you will trigger another zone and start buying. It will take you out. Then you will now start looking for money to fund your account again. Your broker have not sent you a message like, do your parents know the nonsense you're doing on our broker? I think they go send give some people we no one listen. So until price successfully what clears a liquidity zone, do not look for reversals for that market until that liquidity has been cleared. And majority of the time, price approaches your point of interest in a trend-like manner. Here, this breaker that we have here, for price approach this, you can clearly see what trend line liquidity here. So when price starts buying, it's going to buy until it what goes to where the trend actually started from and take it out. So trend line liquidity is one of the most common types of liquidity that we have in the market. Even before price sold from here, it was initially on an uptrend, giving us higher highs and higher lows. It kept happening till price took this low out. Structure shifts, gave us our pullback inducement, triggered the nearest POI, breaker block. It started selling. The sell will happen if you check to observe the type of liquidity the market was making before the structure shift happened. It was what? An uptrend, meaning that there's trend line liquidity on the downside of this chart. You keep taking sales until price takes out the what? This where the trend line started from, which is what markets did here. Any buy you're taking from any zone here, market will destroy you. Prior market to destroy you. If I go and check, I can clearly I remember this trade because I made over 120 from the trade. This was the trade. Over 120K from that particular trade. That sell that happened. This was the sell. See my take profits is where the trend line liquidity started from, where the trend line actually started pushing up. This was that trade, the TP. So everything I'm teaching you guys is exactly what I look out for when I'm trading. I took my entry from a breaker block, taught you guys. The inducement was my liquidity, taught you guys. Structure shift, taught you guys. My take profit level, I applied trend line liquidity, that's what I'm teaching you guys now. So majority of the time that price approaches a point of interest, it does so in a trend line. And even when market was moving down and selling, it was still on a downtrend, maintaining this what trend line here. It is still giving us downtrend, meaning that this market self is not even overall bearish. Eventually, when market will start reversing, it will buy until it clears out this trend line liquidity here. And that was what market did. The moment it gave us this, took out this high and retested this zone, this is the 4 hours order block. It started buying and it will buy until market successfully takes out this high for this trend line liquidity. And did it do it? Yes, exactly. It came here and took out the high. But after taking out the high, that price even started selling to the downside. So majority of the time that price approaches the point of interest, it does so in a trend line manner. And if it does so in a trend line manner, you already know where your take profit level will be, where the trend started from. Hope you guys are following me up. So that is one type of liquidity that we have, trend line liquidity. That is one type of liquidity that we have, trend line liquidity. Now, that is very, very common. 80% of the time, in fact, go to your charts when you're done with this class, back test. 80% of the time that price approaches a point of interest, it does so in a trend line manner. Now, the second type of liquidity that we use, which I've not seen happen on the charts in 2 years, I've only used it twice, but it's still good to teach it, but I don't think you're going to need it now because it does not really show up on the charts anymore. But it's equal highs and equal lows liquidity. Equal highs and equal lows liquidity. Now, when price makes a relative equal high or a relative equal low, that is a type of liquidity. Most people call it a double top and double bottom, but let's say it has to be equal on the same line. Let's assume that this is the line here. The price comes here and makes a low, goes up, comes down and makes another low exactly on the same line, on the same equal low. The moment that this happens, most people see this as a sign of reversal. The market is reversing to the upside. No, it's not. There's liquidity being accumulated on the downside of the chart here, because that is what the equal low is, liquidity. There's liquidity down here. What it means is that eventually, when markets should start reversing, the target for markets will be the trend line, the equal lows liquidity. It does not show up on the charts like that. I've only traded it just twice, and I'm not sure I can see it on the charts now because it has to be on the same low. It to be equal. So it's very, very, very hard to see, but I've seen it just twice on gold before. Now, the market makes a relative equal low. There's liquidity on the downside of that chart that eventually the market must come out and sweep. What it means is that these liquidity zone patterns that I'm telling you guys, you should look out for them while price is coming to trigger your point of interest. But you can observe the pattern that price was on before your point of interest gets triggered. It will tell you where market is likely going to next. If you can observe the pattern that price made, even before your structure shifted, or before you go to your point of interest, or before your point of interest gets triggered, it will tell you where price is likely going to next. So let's assume, for example, market gives you an equal low and then starts pushing up. Then all of a sudden, you get something like this happen. Then it gives you like a structure shift to the downside, gives you your inducement. Then your nearest point of interest will be the other block up here. Then price comes to trigger your point of interest and you're looking for your take profit level. Now, if you observe the patterns on the chart to see where market is going to go to next, most people will now start keeping their take profit at the breaker block here, saying that market is going to buy from this breaker. But one thing they are forgetting is that if they actually look down here, they will see an equal lows liquidity. And mind you, it has to be on the same low, not one that will go down here and on the same low. That's why I said it's not really on the chart like that. Once this is there, it means that there's liquidity laying on the downside of that chart there, and price will come and sweep that liquidity. So it means that if you take the sell from here, your take profit level will be aimed at what? That equal lows. Any POI that you have that is enclosed inside of this equal lows will not respect. Market's not going to respect it. So if you had this breaker block expecting that price will buy from here, your account, then most people will be like, no, I thought us breaker blocks now. You're supposed to buy, see inducement here now, see breaker. So you know what? I will take off my stop loss. Your own don't finish now. Your own don't destroy. Then you now go on Twitter and start dragging people. You don't know how to use breaker blocks. Breaker blocks does not work. You can't take the breaker, you remove your stop loss, market will take you out and take out this trend. So understanding the patterns that price is on before your structure shift occurred, on understanding the pattern that price made before your market, your point of interest or structure shift occurred, will tell you where price is likely to go next. I can't give you an example on the chart for this because I can't find it on the chart. It has not occurred in a long time for me. I only used it once, maybe twice in my entire trading career. But if you see it, it's still good to know that when price gives you a relative equal low, it means that there's liquidity on the downside of that chart. And if it gives you a relative equal high, then there's liquidity on the upside of the chart. It means that if you had a point of interest here and price triggers that point of interest, the nearest drawn liquidity for markets will be to go up here and take out this equal high. Any POI that you have here that may sell the market like a breaker here, another block here, do not look to take this to reverse the market, because market is not going to respect any of these POIs until the nearest drawn liquidity gets taken out first. So any point of interest you literally have enclosed inside of a liquidity pool, do not use it to try and reverse the market when price has not yet taken out that liquidity you have there. You guys following me up? What if I've not been recording this class since? ah. So thirdly, the third type of liquidity that we use, the third one is what we call ranging liquidity. If you're just getting in, the recording will be sent to the class after the classes. So you guys can watch it later if you're just coming in. Do you understand? So the last type of liquidity that we have, no, the next type is what we call ranging liquidity. Now, ranging liquidity is like the liquidity that's being formed when market is consolidating. You know what you call a consolidation? When market is not really trending anywhere, but it's just moving from like support and resistance, resistance back to support, support to resistance, resistance back to support. So something like this happening. When this is happening, this is what you call ranging liquidity. And it's made up of two sides. The one on the up is called buy side liquidity. The one on the down is called sell side liquidity. So what market normally does is that before this starts happening, you already have a structure shift to whichever direction the market is intended to go to. So let's just assume that you had like a structure shift to the upside. Do you understand? To the upside, the market gives you your inducement, then pushes up. All of a sudden, it starts ranging. So you already have your POI in order. Your POI is down here for a buy. Now up here will be your buy side liquidity. And down here will be your sell side liquidity. So what markets will do is whichever direction that price is actually meant to go to, market will take out liquidity from the opposite side first. So since this is a bullish market and market is meant to go to the upside, price is going to come here and take out liquidity on the downside first and trigger the point of interest. Once this point of interest gets triggered, the next place that market is going to is to go and take out liquidity on the opposite side. So now the liquidity here is here, up here. And the moment that price takes out the one on the sell side and triggers a point of interest, what is going to next is to go and take out liquidity on the buy side here to clear this high. Now, the moment that price has not yet taken out this next side of liquidity, do not look to oppose the market direction. Don't look for a sell from an order block here. You'll be gone. Even if you see an order block, don't look for to reverse this market on wow. All of them are still in, all the POIs are still enclosed inside of this ranging liquidity. Think there's a pair that I have that on. Let me see if I can get it. So no, I think it's as a card. I used it here. So this is a war ranging liquid. So once market gives you a structure shift, you have your direction in order, and it starts ranging, you mark out your buy side and the sell side. Whichever side of liquidity gets taken out first, market is going to go and take out liquidity on the other side. And the liquidity that always gets taken out first is the one opposite of where market is going to. So if market is meant to sell, market will take out liquidity on the upside first before it starts selling. And the market is meant to buy, we take out liquidity on the buy side first before it starts buying. So for this analysis we have here, market gave us a structure shift, inducement, then it started ranging. The other block we have here is the 4 hours time frame. Market kept ranging, buy side, sell side, buy side, sell side. It will keep ranging. It will not have a direction in mind. It's not going to trend to the upside, not going to sell to the downside. It's just going to keep ranging. Now, while this is happening, it's going to accumulate liquidity on the upside and it's going to be named the buy side liquidity. On the downside, it's going to be named what the sell side liquidity. Our market is going to do is that it's going to keep ranging until it takes out liquidity on the opposite side of where the market is meant to go to. So market is meant to actually sell, but it goes to take out liquidity on the what upside first. When it takes out that liquidity, it's going to trigger your point of interest. It's going to what, start reversing to the opposite side to take out the liquidity on the other side. So the moment I took myself from this 4 hours order block with this whole range, I knew that my next target for the market would be to the opposite side of the range, which is what, down here. And I'm not going to look for market to reverse the direction until the range actually gets taken out. So I took this sell and I held this trade. Even if there was a pullback, I don't mind. My target for this trade will be to what? To clear this next range here. And what the market do, it sold and sold. And even after all the whole pullback and all, price still cleared it. And what the market did, immediately after clearing, what they do, it reversed to the upside. Now, had it been, I did not have knowledge of ranging liquidity, what would this market do? If I had my TP on at an unrealistic level, let's say all the way down here, what would the market do? Price came here, took out the next range, which is down here, this sell side, and what they do, it bought. So had even I held this trade, what will happen? It will hit my stop loss. Now you now start blaming the person that taught you how to trade, that they did not teach you anything when you don't know liquidity concepts. So it is good to be knowledgeable on some certain things that concept. There are things that people don't really know. So that's why sometimes they will see me holding a trade in one direction. They will say, oh, you're going to take last class. I know some people were. Do you guys remember the last class when some people that were here in the last class? Can you guys remember when I talked about trendline liquidity that last class, and I used BTC as example? Do you guys remember? I used BTC as example when BTC had not even done anything yet. Like, it has not done anything yet. Even on my last live stream, I also showed it there. So most people were looking for buys on BTC. A lot of people bought Bitcoin this week and they all got taken out. Now, if they actually knew the concept of trendline liquidity, they would have understood that the moment that BTC changed direction to the downside, it's not going to reverse to the upside until it successfully clears the nearest drawn liquidity, which is what to go and sweep that trendline liquidity that Bitcoin was on while it was on the uptrend. So this ranging liquidity is what? The third type of way I take my profits in the market. So far, the three ways I've mentioned that I take my profit, which you will not go wrong doing this. You will not go wrong doing this. Even this 4-hour zone that this market sold from, this 4 hours order block here, before price actually started selling from this zone, what did they do? It was on what? An uptrend, giving us what? Higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. This is what? Trend line liquidity. The moment that price triggered this order block, now I said I prefer price to trigger my POI in a trend line manner. It is more convincing that my point of interest is going to hold if the move approaches my POI in a trend line manner. If this market just bought straight up to this level, I will be skeptical taking this trade from here. But it's actually accumulated liquidity on the downside of this chart, meaning that the moment I take this trade for this sell here and I keep my stop loss, my take profit level will be aimed at where the trend actually started from, down here. So the pattern that price uses to approach your point of interest is very crucial to knowing where you will take your profit levels, because that is what your liquidity pool is made of. And the moment you now start trying to buy from OBs here, here, and here, that's when your name will now be sorry, because you will keep getting liquidated and keep getting taken out because you don't understand liquidity concepts. So that is the third way that price we can take our profit in the market, and the third type of liquidity that we have. You guys following me up? Hope you guys are understanding what I'm teaching. Now, the final way I take my profits. Yeah, like I said, it's getting confusing, but this is something that you watch the recording for. That's why I said the questions for this class will be in the next session we'll have. You just have to back test. It will dawn on you eventually. Do you understand? So is using the another way I now take my profit, which is also the nearest drawn liquidity, is using the last high or the last low that the price made before your point of interest gets triggered. The last external high and the last external low that price makes before your point of interest gets triggered. Now, this all also works hand in hand with the other types of liquidity that we have. For example, this is what trend line liquidity. Now, if you're taking trend line liquidity trade, you're targeting where the trend actually began from, right? But at the same time, the last low that was made, the last external low that was made before price came out to trigger this our sell order block was still here. That's the last low. So you can use this as a take profit level. The last low that was still made before price came to trigger our order block here, the last external low was still this low here. So either we apply the concept of ranging liquidity here, or we can also still apply the concept of the last external low that price made before our point of interest gets triggered. So you can also use those concepts to take your profit in the market. It works hand in hand with other liquidity types. It works hand in hand with other liquidity concepts. So trendline liquidity, equal highs and equal lows liquidity, all work hand in hand. This trendline liquidity here was still the last external low that price made before coming to trigger this zone. So you can still use this as a take profit level. I think if you don't want to use the trendline liquidity. This was the last external high that price made before our point of interest here, so that block got triggered. Now, because of it, when market bought, either you incorporate the concept of trendline liquidity or you incorporate the concept of the last high before your point of interest what gets triggered. So you can use this even this trendline liquidity here, or you incorporate the concept of what the last high for our point of interest here got triggered. Same thing here. Either trendline liquidity or what the concept of the last high for your point of interest what gets triggered. So all these things I mentioned are the ways that you can take your profits in the markets. Eniola, we'll have directional bias. That's when we'll talk about this daily time frame thing. So these are the ways that you take your profits in the market, and these are the types of liquids that you have in the market. Remember, whenever you have a liquidity zone and market is already what reversing to take out that liquidity, do not try to oppose the market direction by taking a trade inside using a POI that is inside of that liquidity zone. So these are ways that you can take your profit in the market. And that is it for this particular session. The topic gets a bit complex sometimes, but you just have to master it by backtesting what you've been taught when I send the recording. Any questions you have, write it down. The next class will have a question session. So that is it for this particular session. Well, we're still on 6. So the next class, have your question. Once I send the recording down and watch everything, backtest it, then bring the question on the next class. Do you understand? So once the recording is done processing, I will send the recording to the group chat. You understand? All right then. You guys study well. Do you understand? Study well.